Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark tells us if what caused high anxiety last week is still a concern. Agora Financial's Bill Bonner connects violence, politics, and finance in his new book, Hormegeddon, and how peace is best for the economy. We'll talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is CIBC Wood Gundy's Ross Clark. Ross, welcome back to This Week in Money.
As always, it's a pleasure to be with you, Jim.
Ross, you said all the things that caused this big anxiety last week, not so much of a problem this week.
Well, they kicked the can down the road a little bit once again with Greece. You get some legislation passed through Parliament. By the middle of the week, markets come back to life. The anxiety from that, the anxiety from China a week or two ago, created just some, huge signals that we looked at last week. The VIX was at an extreme. That's the volatility index measuring option premiums. That type of anxiety level, not seen that often. You had Ridex fund flows 9-1 in favor of safe haven funds versus the riskier ones. Just the pessimism index, the CNN fear greed index, that level's only seen 1% of the time historically. So the items that people were most concerned about, usually the things that least likely happen. So you had equity markets in terms of the U.S. market, the Dow and the S&P. They have been flirting right around their 200-day moving averages for the last 2 weeks or so, holding very well at that point, down 4 to 5%. And as soon as things seem to settle in a little bit by midweek this week, we're back retesting the highs. And the strongest of the sectors, the seasonal strength in biotechs is working. We're up to new all-time highs in the IBB, that's the exchange-traded fund for the biotechs. The pharmacares are doing well, health services, the XLV doing well, and U.S. financials right back testing the highs. So it's, you get opportunities when the markets have high levels of concern out there. And, there was this thought that a lot of people had in the previous couple of weeks that, you would see a move towards some of those safer havens like the gold and silver markets that we never saw the pop that you would think might have happened. And typically you would want to sell into that kind of a move anyway. And with the easing of tensions, we've now seen the U.S. dollar really start to come to life. It's managed to push through some initial levels of resistance this week. So with that, you've got the euro, the yen under pressure, and on top of it all here, the Bank of Canada this week decides that the economy is so poor that they've got to drop rates a quarter point, and in turn, Canadian dollar drops another cent or cent and a quarter during the week. So just to follow up on the dollar, last week we talked about it maybe getting into the first of the oversold conditions that we tend to see that are usually a week or so before an interim low. With the Bank of Canada move, that clearly had a lot of pressure into the middle of this week, and we're starting to now get more severe oversold readings on a daily basis. So still think the dollar should be putting in some type of a very short interim low here, with look for maybe bounces of 2 cents or so as the next good selling opportunity for Canada.
Will this help our trade deficit?
Well, that's the theory. You get it down long enough, and it doesn't happen overnight. A low currency, we've seen it over the years. It takes an extended period of time to make the dollar attractive enough or in terms of the Canadian costs on an international basis, driving down far enough to make our products attractive. I really question whether a 77-cent dollar is going to do it.
What's happening with energy stocks?
Energy stocks continuing to see pressure here. The crude oil price closed off the week just around $50.50 US. It's had this initial hard break from the $62 level down, so it retraced half of the gains of the year. It's had this pause, and it probably is ready for the next leg to the downside, which ideally would be back retesting that $42 to $43 level. And as such, you'd expect to see still an overhang as far as selling is concerned for these energy stocks.
Do you think the equity markets in Canada and the U.S. are going to continue to rise over the summer?
Well, I think we've had enough of the negative attitude out there to have put in an appropriate seasonal low for a summer rally. And so I think it's going to be a very, very narrow-based rally. As I say, those four leading sectors that we mentioned, and maybe some of the NASDAQ stocks that are out there might be able to push along here as well. But the seasonal would suggest to me that we could do reasonably well through the second half of this month and into August. I would be cautious as we move through the summer, thinking that those supporting lows that we put in a week ago are really the key to be watching as far as the critical levels. They're say that 5% off the high that we had was where you would expect to see the minimum supports. The worst case scenario in the summer pullback is usually in the 7 to 10% bracket. If we were to have that later this summer, then I think that 10% becomes a very, very critical level to be looking at. Anything beyond that might spark just some waves of selling.
Ross, thanks a lot for chatting with us.
It was good to be with you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. His email, ross.clark@cibc.ca. Coming up next, Bill Bonner on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Bill Bonner, founder of Agora Publishing, available online at agorafinancial.com. He's on the line from Paris, France. What's it like in Paris right now?
Well, it's not bad. It's a bit warm. Nobody has air conditioning in Paris, so even when it gets a little warm, it starts to be a lot warm inside, but it's a beautiful day.
First of all, let's talk about your latest book, Hormegeddon. What is that about, and what is it predicting?
Well, it's an observation, and the observation comes from chemistry, biochemistry, in which it was noted a long time ago that if you give a organism a little bit of something, even a little bit of poison, for example, that the organism will actually flourish. But you give it more and it dies. And I began to think about this. It's called hormesis. And I thought about this and thought about how it works, and it applies to almost everything. Almost everything. Mae West, she spoke about the exception when she said, too much of a good thing is wonderful. But with that exception, everything else, that you get a little bit of it, and that applies to just about everything in the financial world. And it works quite well. And then this phenomenon called declining marginal utility sets in, and you get more and more, and it's not worth as much. And finally, it backfires on you. It is actually bad for you. You can see how that is true in just ordinary things like eating. You eat a little bit of sugar, for example, and it tastes great, and it's good for you. But if you eat a lot of sugar, it is definitely not good for you. Every incremental dose that you get, every incremental pound or ounce of sugar that you eat is actually bad for you. And in certain cases, if you keep going long enough, far enough, it'll kill you. And that's true in the financial world too, that when you make your investments, you start out and you invest in the best stuff you can find and the returns are high and everything works well. And then you keep going and you're getting to more and more marginal investments, and finally you're in very bad investments. You put money in and you lose it. And so we see that in a macro sense too, where economies do very well with limited inputs, but when the inputs become too great, then they fail. And I illustrated this, how it worked in a lot of different ways. And one thing I thought was interesting about it was that, take something like security. Now everybody says, you go through those airport inspection lines, and they say, you know perfectly well you're not trying to blow up a plane, and you look back and forth at, everybody else in line, and you know pretty well they're not either. There's a lot of grandmothers from Florida and so forth. And that thought crosses your mind, say, what is this all about? And then if you ask somebody, they'll say, well, you can't be too careful. Well, in fact, you can be too careful. You can have far too much security, and if you get enough security, it'll kill you. And I illustrated that point by talking about Germany during World War II, where Hitler began in the 1930s with a program that everybody thought was great. I mean, everybody, American congressmen, went to Germany, and they looked at what he was doing. This is the 30s, mind you, the early 30s. And they said, boy, this is great. He's putting people back to work. And sure enough, it looked great, because all of a sudden the German factories were going, and Germans had jobs again. They had been through a terrible, terrible depression after World War I, a hyperinflation, social upheaval, all sorts of problems. And then along came Adolf Hitler with a plan, and his plan seemed to be working like gangbusters early on. A little bit of it was great, and he put people back to work. Well, he's putting people back to work on security. He was making Germans more secure by building tanks and airplanes and putting people in uniforms and so on. And this did seem to work quite well for a while. But the more of it that he did, the weaker. Really, he was taking resources out of the domestic economy, the things that made people really better off. Cars make you richer than tanks. But he was taking resources out of the real economy, especially the farm economy, which was very weak in Germany. And he was applying them to the military economy. And then when he had his military machine ready, then he started attacking people left and right. And he had a whole, to think of Adolf Hitler as a madman is a convenient thing, but he was really an economist. And he had an economic theory that he thought he could stimulate the German economy with military action, and it looked right. In fact, most economists today would say it was right, because they cling to the same silly theories. But so they attacked Poland, and at first, even the war effort seemed to follow this rule that a little bit of it seemed to go pretty well. I mean, they were conquering things and bringing back people, slave labor really. But it looked pretty good at first, and then more and more people got involved in it, more and more with the Germans, so that every family soon had people working for the defense industry or actually in uniform. And so then all of a sudden something else happened, was that opposition disappeared. Because as more and more people got involved in it, it became harder and harder to oppose it, because there were fewer and fewer people who stood apart from it. Everybody was involved. Everybody wanted to support our troops. And the result of it was they got the defense, and we say defense euphemistically because it was really an aggressive force, but they got to be a bigger part of the economy. And then, because of this phenomenon, back in 1942, the war was effectively over by the end of 42, because they had lost Stalingrad, and they couldn't. Now Russia was in the war, the U.S. was in the war. Russia was beating them on the Eastern Front. They couldn't possibly win at that stage, but they couldn't stop, because this phenomenon of Hormegeddon had come into play, where it just kept going. There were more and more assets, more and more resources devoted to the war effort, and nobody could say, that's enough. That's it. And so we see this all over the place, and particularly right now, which is why I brought the book out about Hormegeddon, we see it in finance, where the world now is on course for total destruction, because it is devoted, the whole economy of the entire world is dependent on credit. And a little bit of credit's a good thing, but a lot of credit, keep going and you build up more and more debt, and it's a bad thing. And sooner or later, we have what we have today, is almost all the elite, all of the opinion-making classes, the people who write columns in newspapers, economists who work for the government, the World Bank, the IMF, the central banks of all the nations, all of them agree we have to continue on this course. We've got to stimulate, we've got to spend, we've got to get spending going, we've got to suppress savings and so on. And that course, they cannot stop. Everybody believes and everybody's got a stake in seeing that system continue. And that's what I think is going to blow up because there's nothing else that can happen. It can't stop.
Could you sum it up by never have so many owed so much to so few?
Yes, you could. That is certainly true, but that doesn't necessarily take you where I think we're going because, that was Churchill's comment about the aviators in World War II who defended Britain. But a war is different. A real war is different because a real war for the British came to an end. And when it came to an end, and for the U.S. too, it was over and all the expenses and everything stopped. And so we had, and when people say this all the time, well, the debt in America is not so bad because the national debt really no higher today than it was after World War II as a percentage of GDP. And that's true. But World War II ended. It came to an end. It was won. It was over. And when it was over, the troops were demobbed, and they were sent back to real jobs. The debt stopped. The government stopped borrowing and started paying back. And it was just entirely different. But now, what war is coming to an end? None. There's no end in sight of these deficits. It's a whole different world.
Bill, we'll talk briefly about the Sprott Stansbury Vancouver Natural Resources Symposium that's coming up at the end of the month at the Hotel Vancouver. Can you tell us about that?
Yes. I'm looking forward to it because, by the way, I'm coming to Vancouver on a train. I'm coming on that Trans-Canadian train from Toronto, which I'm looking forward to. So anyhow, that should be fun. I've never seen that part of Canada. But the conference itself, I think, is going to be very good. There's a very good lineup there. And I myself have a kind of speech I've never given before. And I was thinking about my own life. I was thinking about first how this phenomenon, and I'm talking about the credit expansion that began after World War II and really got a big boost in 1971 when they changed the money system. That credit expansion has dominated our entire adult lives. We've lived with it. We've grown up with it. We think it's the way things are. And in the U.S., the stock market went from 1,000 in 1982 to 15,000, 17,000 today, and on the Dow. And we take that for granted. We think that's the way things are. The stocks go up. That's what they do. House prices, they go up. We think that's the way what happens. But these are very, very special phenomena. They're caused by this huge explosion in debt. And this has happened, since it's happened for such a long period during our entire lives, we have no experience to the contrary. And I think we have a hard time imagining that this could be kind of a fluky thing, not a regular thing, not the way things are, but just the way things have been because of this very special phenomenon. This special phenomenon now leading to this Hormegeddon situation that can't stop, but this phenomenon of a huge run-up of debt many times the run-up in real GDP. So we have an economy that's growing, but it's growing at a normal pace, 2.5% for the last few decades, and now 1.8%, 1%. That's the normal growth in an economy, but the stocks have been going up 3 times as fast. Now, why would that be? Well, it's because we have this huge influx of credit, and more all the time. In fact, in the last 5 years, the amount of credit in the world has increased amount of debt has increased by $57 trillion. I mean, it's huge, far more than ever before. And so I think we're coming to the end of this. So anyhow, my speech, which I'm going to give in Vancouver, is sort of a personal story too. How come all this has happened in my lifetime? How come I didn't even notice until recently that there was this whole backdrop to my career, to my life, which was this buildup of debt, which is very extraordinary. It's not something that's usual. And so the way I see things too, and the way I think everybody else sees things, has been colored by this huge, huge development which has taken up our entire lives. And I think that needs to be explored. So anyhow, that's what I'm talking about, and I think it's kind of interesting.
Bill, getting back to what you talked about in your book, you talked about the role of violence and the desire to control people throughout history. Is that something that's just innate in humans? We can't help ourselves from doing that?
Yes, I think that is true. It is innate. And it's innate because for I'd say, humans have only been around for like 200,000 years, but they didn't come from nothing. They came from some other kind of animal, some kind of apes or something, but that we have within us the entire accumulated genetic experience and evolutionary formation of all those thousands and thousands and millions, really, of years. And that experience, if we don't know because we weren't there, but we can guess that it was an experience of hunting and killing, because we are hunters and killers as well as gatherers. And so it seems likely that our experience, and we also can see this by studying tribes, in remote tribes in New Guinea and things, and there's a lot of literature on this, but it seems that we are set up to defend and to attack. And you can see why that might be, because imagine the tribe of people in a remote valley somewhere that didn't have that gene, or didn't have that capacity, or didn't have that instinct. What would happen when they were attacked? Well, they would be wiped out. And we can assume, logically, that the people who didn't have an instinct for either protecting themselves or killing other people were wiped out. And so what we're left with are the people that we see, and there's no surprise here, because any reading of history, which is the modern record, the record of just last couple thousand years, it's just a long story of people killing each other, fighting. And then you look back and you ask, in any war that you can think of, what was that about? And you have a hard time answering. What was it about? They're just killing each other. People seem to want to go at each other from time to time. And I think that that's just the way it is. And so what we have in modern life, in civilized life, we have certain rules of order that have developed over the years to try to contain that. And part of it is religious rules, part of it are state rules. We have the rule against going to war. Attacking another country is a very old rule, and we found when you read Roman history, you find the Romans trying to get around the rule. They would develop these same things, just like we do today. They would come up with these things. Oh, so and so did something, and we've got to retaliate, or we've got to show that we're serious, or we've got to watch out. There's this going on or that going on. There's always an argument. There's always a way to get around the rules. But anyhow, the rules are set in place to try to avoid that, the rules of civilization, so that before, at least a lot of this is guesswork, but before, and Margaret Mead said this, a famous anthropologist she said in the prehistoric days that if a person was in the woods hunting and met somebody from another tribe hunting, his first reaction was to try to kill him. If he was from the same tribe, there wouldn't be a problem. But civilization came along, and people developed rules that said, no, you're not supposed to kill them. And the Ten Commandments were handed down, and Jesus came along and said, love thy neighbor, those things. Those things were big evolutionary kind of developments where people then realized that, no, maybe killing is not the way to go. And by the way, the people who adopted these rules of civilization, love thy neighbor, treat thy neighbor as you would have him treat yourself, those things, they gave those people a big evolutionary advantage, because those people were able to trade with one another without killing each other. Trade meant they were able to make let the division of labor develop, meant they were able to accumulate capital. Money came along. Money was invented about the same time that allowed for all this trade to happen, and that meant that people got to be richer. This is what I thought was a kind of a funny part of my book. People got to be richer. They got to be richer by being civilized. By being civilized meant they traded with each other. They didn't have to have the same religion. They didn't have to speak the same language. They didn't have to be from the same tribe. They could still do business. And doing business made them all richer. And when they became richer, what did they do? They went out and killed people. I thought that was funny. Maybe it isn't so funny, but
well, every spring in Europe, it was like the national sport. You'd have a war, and then when bad weather hit in the fall, they'd have a treaty. It was their version of professional football, I think, and hockey.
Yeah, and very recently, and just before I was born, the worst war in all human history just had ended. And I was born right after World War II, and it was the most devastating experience with war in the whole human record. But the point, I was thinking about how this worked because Europe, in particular, and I'm way out on the limb from a historical or anthropological point of view, but Europe in particular went to war a lot. There were lots of wars. And there was also a lot of civilization developing in Europe. So they traded a lot. They warred, they traded, and they got to be good at both. And then when technology advanced and they could put their ocean-going ships out, then they were able to go over, say, to America, and with the technology and the techniques that they developed in war and the wealth that they had accumulated from civilization, they were able to dominate everybody. And Europeans dominated everybody they came in touch with. And so that, at the end of the 19th century, the map of the world was largely pink, because pink was was Great Britain. Anyway, I do think that, we're wired for war, and you've got to be alert to it and got to be ready for it and try to avoid it at all costs.
Somebody suggested to me that the money spent on the F-22 fighter, over $1 trillion, if that had been invested in the economy, everybody in the U.S. would have a job, even the illegal immigrants.
I hadn't heard that figure, but that's probably true.
Is there a lesson there that governments spend just too much damn money on defense, or do you have to be reasonable? Because if you don't have a defense, someone will try to take advantage of you.
Oh, you definitely. Yeah, I think that's exactly right. You need a defense because we are wired for war. We're wired for it. But we're also wired to take advantage of people by pretending to make war. This is what's really going on now, that everybody wants an advantage. And you get an advantage in a lot of different ways. And when Eisenhower retired from the presidency, he gave his famous speech where he said, "Beware of the military-industrial complex." Now, if anybody knew about that military-industrial complex, it was Eisenhower. He had spent his entire career in the Army and in the White House, and he knew that people will use defense as a way, as they did in Germany before World War II and during. They use defense as a way of really shifting resources from other sectors to the defense sector. There's nothing unusual about that. Everybody wants to do that. The educators want more money. The health industry wants more money. The entertainment industry wants more money. And it's not surprising at all that the defense industry wants more money too. And the defense industry periodically or episodically, they are able to gin up enough public interest or enough support so that they're able to shift huge amounts of money from the rest of the economy to themselves. And that's what's happened in the U.S. I mean, when the Berlin Wall came down in 1989, it was effectively the end it should have been the end for America's huge defense spending because there was no enemy. But it didn't. Defense spending actually went up in a remarkable way because by then, the defense industry had such a grip on the political process and does today. And still does. And now they have wars going on all over the place against who knows who. I mean, nobody can remember who's the friend and who's the enemy, and it doesn't really matter because the whole purpose of the war is not to win it. It's just to continue it as a way of directing more and more funds to the defense industry.
Bill, is there any way to control governments who seem to be obsessed with trying to look out for us, but also now with this so-called war on terrorism really want to control us as well? Can you control society and still have a profitable, free society at the same time?
No, you can't, unfortunately. I mean, I say unfortunately, you can't. And because a free society requires free signals and requires freedom of action, naturally. And a good economy requires the same thing. In order to have a strong economy, you need a civilized economy, and a civilized economy is one where you don't have people forced to do things. It's where people innovate. They innovate freely. They innovate often, usually, not knowing what the innovations will do for them. I mean, the future is always a surprise to us. The entrepreneurs take this and that and put them together and hope for the best, and sometimes it works and sometimes it doesn't work. But if you short circuit that process, which Hillary Clinton, by the way, is now promising to do. She gave a speech the other day in which she said there was no way she was going to allow things like Uber and Lyft and Airbnb to be able to operate freely. They would have to come in line to the American system of regulation and so on. So what she's saying is that she wants to be sure that everybody is under control, and everybody's under control means they've got to have the kind of job that's been legislated, been controlled, been stamped, corrected, and so on. They can't just be part of this new informal economy that's developing, the internet economy. So in a free society, you have a free economy. In a free economy, you have free prices. You can't have the Federal Reserve setting the price of credit. That doesn't make any sense, because if they do that, then all of a sudden you don't know what the price of credit is, and people start borrowing too much, and that's, of course, the situation we have today. A free society requires a free economy, and a free economy requires a free society. And you change any of those things, and all of a sudden you're not free anymore, and you're controlled, and we're seeing more in that. It's more and more of that. I mean, there's so many regulations, so many controls. It's very expensive, and that's, of course, why the economic growth rate has fallen so much. There's so much debt, so many regulations, so many legacy projects that need to be financed, so many, I call them zombies. There's so many zombies out there, companies that are no longer effective or profitable and should have been put to rest a long time ago. Instead, they're drip-fed credit from the banking system, and they stay alive. But that's true of programs, too. A lot of government programs. There are just thousands of these things supporting umpteen million zombies. And unless you can put a stop to that, which you can't, it just gets worse and worse until it finally collapses.
What are some examples of what you call zombies?
Oh, zombie. Well, a zombie is, in correct usage, a zombie is somebody who lives at the expense of others. And sometimes it's hard to tell. Sometimes it's easy. A guy who puts a gun in your back and takes your wallet is a zombie because he's living at your expense. And people who, in the U.S., they have this phenomenon of people who claim to be disabled, and they get disability payments from the Social Security Administration. And I say claim to be because I don't know, but the rate of people being disabled went up so fast recently that you have to wonder what in the world was happening that they're all of a sudden disabled. And some studies have been done to show that they're not really disabled. They're just not feeling up to par or have a bad back or something or other. But there are a lot of those kind of people, and people on welfare generally not supporting themselves, letting other people support them. Then there's those, of course, are the low end. At the top end are all people who are getting multi-million-dollar contracts and multi-million-dollar bonuses. People on Wall Street, for example. Wall Street is supported largely by the Fed and by the government, because they've distorted the interest rates so that now the Wall Street can create money at no cost and lend it out and make a lot of money that way. And when you look at how much money has shifted in the last, it's something like $17 trillion has shifted in the last 6 years since the crisis of 2008, 2009. Something like $17 trillion has been added to the value of assets, most of which is owned by or sold by or Wall Street gets a transaction fee on. Now, this didn't just happen. It was caused to happen by the Federal Reserve, which put interest rates down to zero and left them there all this time as if there was some big emergency or something. But so you have all these so there's zombies everywhere, but sometimes, as I say, it's hard to know who is a zombie and who isn't, because some people are actually working hard, but working hard doing something that they wouldn't do at all if it weren't for money that was taken from somebody else and given to them. So it's not a simple matter, and not all zombies are bad people by any means. Some work hard, are honest, forthright, and so on, because whole industries have been zombified. So someday I'll publish a guide to zombieism.
Good zombie, bad zombie.
Yeah.
What about the sudden rise in the polls by Donald Trump? I mean, you're talking about Hillary. She wants to control everything. What's Donald's take on stuff? Or do we know?
I think Hillary and Donald are very close to one another. They both want control of things. It's hard to know what to make of the Donald, and sometimes I think, maybe he is not really what he appears to be. You never know why people are doing what they're doing, and Donald has been so forthright about it that you kind of wonder, what is he actually up to? Could he really believe what he says? I don't know. You never know. I think that the support that he's getting shows that the voters are kind of fed up with the mealy-mouthed politicians who themselves are mostly zombies. They're not a very good crop of politicians, and I'll say this for the Donald, he comes out and just says things, outrageous things, things that don't make any sense and things that wouldn't hold up very well. But at least he says them, and I think he is a kind of breath of fresh air to a lot of voters, and I think he's getting a lot of traction because of it.
What about the fact the mainstream media has dumped all the shows that he used to do? Is there kind of a left-wing bias there?
Yes, I think there definitely is. The mainstream media has a kind of pro-Hillary bias. I don't know if that's good or bad, but I think that's what it is.
What about the situation in Greece? Is there going to be a settlement, or at some point they really will just have to default and start over?
Well, I just came from Greece. I went there because I wanted to see what was going on with my own eyes, and what I saw was not much is going on. I mean, when I was there, wasn't a panic. People were just getting along. And I think that's partly because the Greeks are used to this. I mean, they've been in default almost half of the time since the country was made a country in 1828, and they're used to it. And the Greeks also have their own ways of doing things, and it's a little bit like the Argentines. You can have a financial crisis in some countries, and people are ready for it. They don't trust the government, they don't trust the banks. They've got cash, they've got little deals, they've got the society is, in some ways, we would say terribly corrupt, but I'm not sure that's a good thing or a bad thing. It's just that people are used to making little side deals and working with payments to one another in cash, in envelopes. And so the economy is not all what it appears to be. And so on the surface of it, it looks like it's going to be devastated by a break with Europe, but it's not clear to me that that's the case. It's a much more resilient. The black market is generally more resilient than the above-board market, and so Greece is probably more resilient than we think. All that said, I think there's no way they're going to make this work, because you can't keep lending money to somebody who can't clearly pay it back. I mean, that is just not going to work. And we keep using the term, they're kicking the can down the road. Well, they just keep whacking that can, but sooner or later they're going to kick that can and it's going to explode on them. And when that happens, it's going to be a mess. I don't think it'll be a big mess, because I think the Greeks are pretty resilient. They'll figure something out. Some people will lose money. Some people will make money. It won't make that big a difference in the world.
What about the move by government to get rid of cash? In Europe now, they have a limit on how much cash you can take out at any one time. In the U.S., if the cops catch you with more than, say, a couple $100 in your pocket, they're going to seize it because they think it's criminal to have cash.
Well, I don't know if they really think that, but it's very convenient for them to think that. Their whole police departments that get a large part of their budget just by taking people's money away. Clearly unconstitutional, but so far no one has done anything about it. I think it just shows the breakdown in the system of law and order that we enjoyed in the U.S. for a long time, where now people don't believe in the law. They don't believe that works that way, and they expect the police to take their money. But I don't think it doesn't lead to anywhere I want to go, but I don't think there's much I can do to stop it. So I think more and more we're going to see more and more of this kind of extrajudicial taking and more kind of funny business. I think the economy of the U.S. is sort of going more in the direction of Greece and or Argentina, and people are going to have to learn to operate in a much more subtle and flexible way. They're going to have to keep more cash, I think. And that's the trouble. They want to take the cash away because they want to make sure you can't escape. And if you have all your money in a bank, it's not the same as having cash. And we've seen that in Greece. The banks have been closed there now for the last 2 weeks. So it meant that if you had a bank account, you're effectively cut off from your cash now for 2 weeks, And when they open, who knows what you're going to really have? They could change your deposit into a drachma deposit, for example. They could give you a big haircut, which is exactly what they did in Cyprus. So, having money in the bank, especially when the banks are kind of in desperate shape, is not such a hot idea. And that's, of course, why the government wants to make sure that's what you have to do, and they want to cut off cash. I don't know how far along that is. It's hard to know. I know every government is talking about it, and economists are talking about it. And if I were listening to this program, I'd want to make sure I have some cash just in case. I don't know what's going to happen, but cash, as Nassim Taleb puts it, is optionality. When you've got cash, you have the option of doing, you can always turn it in, you can always put it in a bank, but sometimes you can't get it out. So it's better to have a little bit, or enough for a couple of weeks anyway, just in case.
Was the Chinese government right to intervene massively in their stock market decline, where they forced government companies and pension funds to invest in stocks?
Well, right. It depends on what you mean. If you think that if you want the stock prices to go up or stay up or not go down anymore, then yeah, they were right. But it's not. You don't get a healthy economy that way. You don't get a healthy market. You're effectively destroying the market mechanism. The market discovers prices all the time, every day, every minute. The market is discovering what prices should be, and that discovery is the information that everybody needs to know where to invest their money, where to take their money away, where to work harder, where to pull back. And as soon as they start intervening, meddling, fiddling, well, then you've got a signal, and you don't know what it means. And we have that. It's the same problem in the U.S., where we don't know what any price means, because the interest rate is not an honest interest rate. We don't know, and so a lot of mistakes being made. Because you get bad information, you make a mistake, and that mistake is money. You're going to eventually somebody's going to find that they made the wrong investment, that they put money in the wrong factory, that they built the mall in the wrong place. They built too many houses. That's what happened in the housing bubble. And so is it the right thing? No, it's a very, very wrong thing for the government to do if they wanted a strong economy. But it might be the right thing for them to do if they wanted to hang on for a couple of years with the appearance of a strong economy.
It seems that there's a dangerous mix of business and politics, where it's getting harder and harder to tell the difference between the two.
Yeah, I think that's generally true everywhere, because there's so many phony signals being sent by so many people, and so many things, that you don't know what's going on. I don't know if you're talking specifically about China, but I'm talking about everywhere, where we just don't know anymore what things really mean, because none of the things that we go by are honest. And this is new, by the way, because up until, through the war period, of course, it was very different, but most of the last couple hundred years, up until 1971, at least you could trust the money. At least you knew that you turn in your $20 and you can get an ounce of gold from the U.S. Treasury. That was something you could count on. And so when you saw a price, you knew that what that was really worth, or what it should have been really worth. But now you don't have that. You don't know what the money's worth. You don't know what the prices mean. You don't know anything. And these numbers the government comes out with, what do they mean? They're all so jiggled up. And, like employment, even something as simple, you'd think as simple as employment, you don't know what it means. We don't know whether the employment is going up or down. So economists now have big arguments about what the numbers mean, because you can't trust them. They're all kind of phony baloney.
Well, it's like the inflation numbers. They took the price of energy and the price of housing out of it because they said they were too volatile, but you take housing and energy out of your prices, what have you got left?
What have you got? Exactly. You don't know anything.
How are slavery and governments alike?
Well, they both rely on force. And this I thought was an interesting thing, because slavery has disappeared largely. There are a couple little pockets of slavery in the Horn of Africa, I think, but slavery has disappeared from the world, which was a startling, extraordinary, remarkable achievement for mankind, because slavery had been around for so long, from the beginning of time until the 19th century, that you would have been excused, as the founding fathers should be, for believing that it was permanent. And but it wasn't permanent. It was a feature of the economy, because slave labor was good if you were rowing a boat or harvesting cotton from a field, or anything that could be done kind of by brute force without too much supervision. But as the economy grew more complicated, this was already the case in America in the 19th century, especially in a place like Maryland, where I'm from. Slavery had almost disappeared from Maryland by the time the Civil War came along because it just didn't pay. You needed more skilled labor, and skilled labor was hard to get from a slave. You needed somebody to learn. It was easier. It was cheaper to pay them. So slavery was going away, and it did go away all over the world. It wasn't because people suddenly became smarter or nicer or anything. It was because slavery no longer paid. That's an exaggeration, but it's more or less true. And you can imagine people now trying to operate Google or any modern business with slave labor. It just wouldn't work. You need people to cooperate. It just wouldn't work at all. But anyhow, so it led me to think that I wonder if, because slavery is based upon brute force, where you could force somebody to do something, and the other thing that works that way is government, where you can force people to do something. If you have a territory and you're the government, you have a monopoly on force, on violence. And I began to wonder whether government too wasn't something that we would have forever. Whether government also might disappear as technology advances and it becomes less easy to tell people what to do. And that is what we're seeing in this new economy, in the internet economy. We have now millions of people all over the world who are working in a rather informal way over the internet and banking using Bitcoin and things like that. And it's very, very difficult for the government to control these things. And so I began to wonder, and at this point it's just a wonder. I don't know at all, and I'm not even predicting anything. I'm just wondering whether the same sort of process of technological development that makes it harder and harder to work with slaves also makes it harder and harder to keep citizens in control and take their money and tell them what to do and pass thousands of laws that they have to follow. And we're seeing backlash again. I think that's really what Donald Trump represents, is he's sort of the unthinking backlash against all these rules and regulations and things people don't understand and don't like. We've seen that in other countries. Here in France, you have the Le Pen sort of feeds into that, and some of it I agree with, and some of it, of course, it just seems kind of loony to me. But there's definitely that sentiment out there, and there's good reason for it. Government is becoming very, very expensive, not just in terms of taxation, but in terms of what it costs people to operate. I'm sitting in my office in Paris, and good God, there's so many what they call dossier here on labor relations, on this, that, and the other. You spend so many hours trying to keep up with this paperwork, trying to keep up with these regulations, that you don't have much time left over for actually doing your work. I think people are getting fed up with that, and it could be that cost just gets to be so great, and the opportunity made available by technology to sidestep all that becomes so well developed that that government kind of recedes, that government doesn't work anymore, that people kind of abandon it, that they're not interested in it anymore.
Do you have faith that perhaps when we have major problems, people tend to invent things that overcome those problems and make life better?
No, I don't think that's... I think what happens is people are always inventing things all the time, and sometimes things go well and sometimes they don't go well. And when there are problems, a lot of people start looking for solutions, and often sometimes they find solutions. But sometimes there are problems that don't have solution. And those problems, like I tried to describe in Hormegeddon, are problems caused by solutions, where people think they can solve problems, and sometimes they're problems that don't even exist. They think they can cause problems by coming up with their own programs and so on, and the programs actually make things far, far worse, and then they can't stop, and they just go on until the whole thing falls apart. So I think that's a phenomenon, too, we need to keep in mind. It's not because people are capable. It's not that people are not capable of finding solutions, of thinking hard and developing things and coming up with innovations, but sometimes there are patterns at work of human emotions and patterns of human motivations and things that are very complex and get channeled in a direction which become almost impossible to stop.
In your book, you mentioned that taxes are parasitic. Please explain.
Oh, well, taxes parasitic, meaning that government takes money from you and gives it to somebody else. So that in a pure or theoretical sense, government is giving it to somebody else, your money to somebody else for your benefit. I mean, government is doing things that have a benefit for the whole society. That's what it's supposed to be doing. Government has a general interest, the commonwealth at heart. But in practice, really, what they're doing is taking money from you and giving it to somebody else. And that somebody else is a zombie, by definition, somebody who lives at your expense. And there's so many of these people. And right now, the numbers keep changing, but we hear in America that more than half of the voters get money from the government. That is money that they didn't earn, money that somebody else earned. And, that's a lot of zombies.
Also, you mentioned in your book that debt might be a key component to controlling people.
Yeah, I mean, there are regular slaves, there are wage slaves, people who need to work in order to get the money to pay for their daily bread, and there are debt slaves, people who have to work just to pay for the things that they have consumed in the past. And now this is this fairly new phenomenon where government borrows huge amounts of money in order to give it to old people, for example, and defense contractors. And that money borrowed needs to be paid back, but by whom? Because we don't earn enough to pay for all those expenses, so the debt gets pushed on to the next generation. So you have a case, really, of somebody born today who 30 years from now, if all goes well, 30 years from now or 40 years from now is paying for some medications given to somebody before he was born. And that I don't think is going to work. I don't think that person is able or willing to do that. I don't think this system could possibly sustain that kind of tension and contradiction.
Canada's Finance Minister Joe Oliver said recently, "Why worry about our government policies? You won't have to pay for it. Your grandchildren will." He even admitted that's what they're doing.
Thank you very much.
Does government guidance ever lead to prosperity?
No. I mean, who knows? I think there's so many people in government that it wouldn't be at all surprising if by accident one or two or once in a while, occasionally, somebody came up with an idea that was actually useful. Al Gore said he invented the Internet, for Pete's sakes. So who knows? The military is always coming up with technology at great expense, and it's, occasionally something useful comes out of it. But no, I mean, generally they're not trying to come up with anything useful. So, I mean, by chance it's sure possible, but in terms of the investment, I'd say it's very unlikely.
Whistleblowers who shine a light on corruption and criminal activity often are treated like criminals instead of heroes. How come? I'm thinking about Snowden, for example.
Yeah, well, I think it's pretty obvious that the feds, the zombies, the cronies, the people who run the system, the elite, the people getting rich off of the system, last thing they want is for somebody to come along and say, "Whoa, wait a minute, what you're doing is wrong." So naturally, they're going to close ranks and they're going to try to show that the person who's blowing the whistle is a traitor, or that he's some other problem. They're so. The U.S. has something like, I can't remember, I think it was something like 25 agencies that are clandestine, and all of them snooping around, gathering information. So I think these people have a lot more effect already than we realize, because imagine if you're a politician, and imagine the politician who hasn't done something wrong somewhere in his past, and imagine that he is going to run for Congress or run for the Senate or run for the presidency, and his campaign is to try to reduce the role played in public life by these spooks. And imagine that he gets a phone call that says, "I don't think you want to do that because this information that we have won't look very good." And then, so what does he do? Well, I think what he does for his family, for himself, is he withdraws. Probably has a far greater impact than we realize. I certainly don't know. That's not my area of specialization, but I'm always surprised about what kind of things go on when you find out about it. And you think, my God, they did that.
Well, J. Edgar Hoover stayed in charge of the FBI simply because he had blackmail material on every major politician.
Wouldn't be at all original or novel for that to happen now. And with so many spooks doing so much spooking, it'd be kind of amazing that they didn't have things on everybody.
Did Iceland do the right thing by jailing corrupt bankers and bailing out homeowners who were going to lose their houses?
Well, I don't know. I didn't follow it that closely. In retrospect, it certainly looks like they did, but I don't know what the bankers did exactly. I don't like to say that they should go to jail or anything. But when you have too much debt, I think Iceland did point the way. You just got to admit you can't pay it. I think this business of Greece to be borrowing more is got to be really, really stupid. I mean, stupid in the sense that their losses are just going to be bigger. And Iceland did do that. I don't know whether they did that because they thought it was a good idea or because they didn't have a choice. But they did do that, and the result seems to be good.
What markets do you see opportunity in going forward?
Well, right now, I see opportunity in Russia. I see opportunity in Greece. In Greece, the prices are so low that it's hard to believe you would go too far wrong. But these are opportunities for speculators. You would have to, if you were a serious investor, you'd have to do a lot of work before you put any money in these places. But on a global scale, there are not many markets that are cheap. And in fact, in a pure numbers basis, China is fairly cheap. But again, it's a kind of you'd have to be a pretty gutsy investor to put money in these places. And it probably would turn out just fine. I don't know. But in the world as a whole, I would say there's probably more to be made on the downside than the upside. That is to say, there probably more inflated asset prices than there are deflated ones. And how you do that? Well, if you're a speculator, you want to have some very long short positions, but most people don't want to do that. Most people want to just find serious, sensible places for their money, and that's almost always finding investments around the corner. Not in China, not in Greece, not in Russia. You find things that really work. Parking garages, apartment buildings, convenience stores, things you understand, oil rigs, things you understand where the cash flow, the cost, all are understandable. You want to have those things when the crisis comes, things that don't get washed away when there is a crisis, things that hold up, things that people want. I don't think there's any mystery to it, but speculators might make a lot of money right now by putting money into Greece. Most people probably won't want to do that.
Where can people go to read more of your writings?
Oh, well, they can just go to my free daily commentary at diaryofarogueeconomist.com. Diary of a Rogue Economist. That's rogue, not rouge, but it's a Diary of a Rogue Economist. And every day I write, and I've been writing every day for the last 15 years, I think. And people say, well, gee, how do you still have anything to say? And probably I don't, but I just keep at it anyway.
Bill, thank you very much for chatting with us.
Thank you. It's been a pleasure.
My guest has been Bill Bonner from agorafinancial.com. Well, that wraps up the show for this week. Thanks to our guests, Ross Clark and Bill Bonner, and thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.